I have literally gotten countless requests from you guys to do a strategy on scalping. I know most of you like scalping in the market, and that is really good because it brings that adrenaline rush that every trader wants to get. But remember, scalping can be dangerous if you're using the wrong strategy or if you're using a strategy that you don't understand. But in this video, I'm going to show you a very simple strategy that you can apply onto your charts, apply it to your trading, and see yourself becoming more successful. So if you're new to the channel, leave a like on the video, subscribe to the channel, and also share your thoughts in the comment section down below. If you're looking for a broker, find the links to a very good broker in the description of this video. So without wasting any time, let's go onto the charts and I'll show you guys how you can use this scalping strategy to benefit from the FX market. Let's go right now. This is a 5-minute gold chart as we are going to look at a scalping strategy. Remember guys, when you're scalping, you really need to be attentive and you need to be on the charts almost all of the time to monitor your positions, because when you are scalping, the market is moving at quick intervals. Okay, you are not going to take a trade then you go and do something else while you're waiting for the trade to reach its take profit or stop loss. These trades really move fast because they are on lower time frames, 5-minute chart, occasional 1-minute chart if you want to scalp there, but here we are using the 5-minute chart. So this strategy is just based on 2 candlesticks. Okay, it's based on 2 candlesticks. I remember I've shown you guys that you can use just 1 candlestick to profit from the market on this channel. I have a full course on a 1 candlestick strategy. You can check it out after this video. I'll leave a link of it at the end of this video. In this case, we are just using 2 candlesticks to scalp. You can combine this strategy with the 1 candlestick full course strategy and you will benefit even further. So without wasting any time guys, let me show you how you can use this strategy by giving you an illustration of how it works first. Then we can go onto the live chart and I'll show you how you can implement this on a live market. So here we have a sell example and here we have a buy example. So all you need is 2 candles. Okay, you need the previous candle to be a bullish candle for a sell trade to happen. You need the previous candle or the closed candle to be a bullish candle, and you want to draw a line at its low like this. Okay, draw a line at its low, and then you want the next candle to be a bearish candle so that you can get a reversal trade. Okay, you want to get a bearish candle that breaks the low of that previous bullish candle. So if the previous bullish candle's low, let's say the low, is broken by the next bearish candle right here, then you want to take a trade. You only need these 2 candles here. Okay, so you don't need any other candle, you just need these 2 candles to take that sell trade. So for the buy trade, you only need the opposite of the sell trade to happen. You need the next candle to be a bullish candle that takes out the high of that bearish candle. So this strategy is basically a breakout scalping strategy or a reversal scalping strategy. So you only take trades once the previous candle's high is broken by the current bullish candle and the current bullish candle closes above. Don't take a trade when the candle has not closed above the previous candle's high. Okay, and in this case for a sell, don't take a sell trade if the candle closes above the previous bullish candle's low. For example, if this candle closed like this, that trade does not work. Or if this bullish candle closed like this, okay, that trade does not work. You want these candles to close or break and close below the previous candle's low, and you want this bullish candle to break and close above the previous bearish candle's high. So how does that look like on the live chart? Let me show you how that looks like on a live chart, maybe on a 5-minute chart. Ideally, you can trade this strategy on any time frame, yes, but I'm showing you this with a scalping perspective in mind. You can trade this during volatile sessions or high volume sessions like the London session or the New York session. However, if you find a good setup within the Asian session, if you're trading within that Asian session, you can still get that set up within this Asian session, as I will show you guys right now. So what candlestick pattern are we looking at? We're looking at that formation that I've just shown you. So let's look for it first in the Asian market here. Okay, so here, let me zoom in so that you can see. This is a scalping strategy. You don't have to hold the trades for long. Just target a 1-to-1, as you've seen here in the illustration. Let me go back here and show you that first, because I want you guys to understand the things clearly before you start engaging in this trading. In this illustration, this is a 1-to-1 risk to reward ratio, okay, because we are scalping. The stop loss for this trade has to be above the previous candle's high, okay, in a sell trade. Put your stop loss above this candle's high, the candle which has closed below the previous bullish candle's low. Your stop loss is above it, and then you target a 1-to-1. The opposite is true for a buy trade. You put your stop loss below that bullish candle's low, and then you target a 1-to-1. So you can scalp in and out of this the whole day if you can sit by your computer. All right, so here in the Asian session, we are looking at this candle here. You see that this candle, this is its low. You see that red line? That is the low of that candle. Let me zoom in real big so that we can all be able to see what I am showing you guys here. You can see that that candle there was bullish, okay? So this is its low at the red line. This red line is at its low. I've drawn it at the low. We can even use, let's use this so that we can see it more vividly right here, okay? So that is that candle's low. The next candle is a bearish candle. You can see this bearish candle closes below that green line, okay? So here you don't waste time. This is a 5-minute chart. You take a trade here. When that candle closes, the next candle here, you take a trade, okay? Now you are looking for a 1-to-1. Your stop loss is going to be above this black candle or the bullish bearish candle's high right here, just a few pips above its high, okay, maybe 2-3 pips above the high, and then you are targeting a 1-to-1 risk to reward ratio. Don't target high risk to reward ratios, okay? So this trade gives you a winner. Within the next 5 minutes, you're out of that trade, okay? You are out of this trade, and then you get that trade as a winner, all right? So you look for more trades. So let's go ahead and look for more trades of that kind, okay? This strategy is not like 100% accurate or 100% that will give you results. Like for example here, we would not have won this trade because you can see that this is a bullish candle. This bearish candle closes below it, but when you take this trade here, okay, at that candle's close, take that trade and your stop loss above that candle's high like this, okay, and you're targeting a 1-to-1, you lose that trade, okay, targeting a 1-to-1, this trade would put you in a loss. But remember, you are scalping, okay? Just keep on looking for those opportunities like that, right? So that was an example for a sell. Let me just show you an example for a buy, okay? For example, an example on a buying market, okay? So you can do this for a long time. You can do this for a long time. You can be stopped out many times, but you can eventually pull out of this and then you end up being profitable. For example, even here we had a trade that did not go well, okay? This was also stopped out, so you have 2 losses there. Even this one would stop you out here, and then yeah, this would also stop you out. One thing that I forgot to tell you guys is, as you're trading this strategy, mind the trend of the market, okay? Like for example here, it was okay for us to sell here because this trend is bearish. We are seeing that market is breaking structure from up here. It has been breaking structure going down, okay, creating lower lows and lower highs like this, okay, creating lower lows and lower highs. Let me just change the color of this so that we can see that clearly, right? So you can see this was a downtrend, so it was okay for us to sell here. But in this case here, these last 2 that I've shown you here, those were not okay for you to sell from there. You mind the trend of the market. When you see the market creating higher highs like this, like that, okay, you only look for buys. You only look for buys when you're seeing the market trending up. The other thing that you can do is you can use a moving average. Use a moving average, a 20 period moving average. It will help you to determine the current trend. Okay, for example, let me show you here. Let me just change this input to 20 so that we can be able to see how that can help us. Okay, so yeah, when the price is above the moving average, you only look for buys. When the price is below the moving average, you only look for sells. Okay, you can also use a 50. A 50 would give you a more clearer picture. Okay, a 50 period moving average in this case would give you a better picture like this. Okay, use a 50. So when the price is above the 50, you're looking for buys. When the price is below the 50, you're looking for sells. This can help you with gauging the trend, right? So we are looking for a buy now. For example, here we are in the London session. Let me show you here on the London session. I'm trying to show you in different sessions, Asian and London and New York, so that you can be able to use this in any time zone that you are trading from. Okay, so here we can look for like here we see in the London session that there was this candle right here, which was a bearish candle. You can see that was a bearish candle. And then this next candle here, I'll zoom in so that you can see clearly. Okay, the next candle, as you can see, this bullish candle closes above this bearish candle, so you can take a trade here at that candle's close and then put a stop loss below that candle like this. Target a 1-to-1 like this, 1-to-1 risk to reward ratio, right? Then you can keep on as long as the price is above the 50 period moving average. If you see another opportunity, like here we see another opportunity right here, this candle is bearish, that next candle closed above this candle's high, so we take another buy after that candle closes. We put our stop loss below that candle's low like this, and then we target a 1-to-1 risk to reward ratio like this. That trade would also win. These trades are basically taking you about 15 to 20 minutes. Some of them take around 5 minutes to play out quickly like that. Okay, so you can see also that here we would get another trade. Like here we'll get another trade. Okay, we'll take another buy after that candle closes. We put a stop loss below that candle's low, and then we target a 1-to-1. You can keep on doing this while you're seated in front of your computer, and you make this money. Okay, so this is how you enter and scalp the market the whole day using just these two candles and this 50 period moving average. When the price goes below the moving average, you start looking for sells when it crosses below the moving average. Like here, it has crossed below the moving average. Even here it crossed below the moving average, but it went back above it. Okay, so when the price is above, you only look for buys. When it is below, you look for sells, right? So like here now, there is this candle which closed below that bullish candle. You can see this rejection candle was bullish. This next bearish candle closed below it. We would have taken this scalp trade on gold. Okay, our stop loss would be above that candle high, and then we would look for a 1-to-1. This would have been a winning trade. Within 10 minutes would have won that trade. Okay, so guys, this is just a quick video to show you how you can scalp using just two candlesticks and this 50 period moving average if you want. If you don't want to use the 50 period moving average, you can just look at market structure. Is it creating higher highs, higher lows, or lower highs, lower lows, for you to gauge which direction you are looking for your setups in. Guys, if you found any value with this video, please leave a like on the video, subscribe to my channel, guys, and also join the channel membership. It's just about $2 every month, but it will show me that you guys like the content and you enjoy what I am producing for you guys here. Be sure to check out this next video, which is a full one candlestick strategy course that is available for free here on YouTube. Thank you guys for sticking around with me till this time. Until next time, peace and out.